What in the world is going on with the real estate market? What is going on with mortgage rates? In today's video, I'm going to give you an update, what it means for buyers, what it means for sellers, what it means for investors. As a mortgage broker who's in this stuff all day, every day, talking to real estate agents, talking to buyers, talking to sellers, talking to consumers, talking to everybody, I'm going to give you my inside track, finger on the pulse of the real estate market, unbiased opinion on what's going on. I'm going to give you some nationwide stuff. I'm also going to dig into my local market here in Sacramento, California, just an overall view of what's going on in the real estate market, because I think it's important to think about, to talk about. I'd love to get feedback. So in the comments, please let me know, hey, I'm out here in Dallas, Texas. This is what I'm seeing. Over here in Memphis, Tennessee, this is what I'm seeing. I'm in Southern California, and here's what I'm seeing. I'd love to get the feedback, real world, anecdotal experience. So without further ado, let's jump into it. Real estate market update. I'm Matt the mortgage guy. I've been a mortgage broker for 12 years. I do a bunch of 1 to 4 unit residential stuff for buyers of all types, for investors of all types, investors with, 1 or 2 rental properties, investors with 100 rental properties. I work with first-time home buyers. I work with people that are buying $5 million homes and everything in between. So enough about me. Let's get into this. First and foremost, some national trends. And, as much as some people in my position wouldn't want to talk about, the market being soft or slow or softening, I'm just going to give you the real true data. Home price growth is slowing. So I'm a believer in holding real estate for long term, and the fact that it appreciates is great. Across many U.S. markets, year-over-year gains are flattening, and in some areas, prices are dipping or flat. It's no secret to anybody paying attention that there's tons of markets in Florida and Texas that have actually seen quite a significant deceleration, return to the norm, home price depreciation, whatever you want to call it, since a lot of them peaked somewhere in early to mid 2022. Inventory is creeping up in a lot of different markets, but supply is uneven. In some areas, there's next to no supply, so there's still a little bit of upward pressure on prices. In other places, again, some Florida and Texas markets, tons of inventory that's pushing home prices down. Many markets across the U.S. are struggling with insufficient housing stock, especially when it comes to affordable housing. As an investor, that's something you need to pay attention to. That's something that you should have in the back of your mind. Find a way to provide affordable housing, whether that's pad split or some other model supply affordable housing. We'll get to that later when we talk about, investors and what investors should be looking for. Buyer behavior is cautious. I know this one more than most, right? Because I'm talking to buyers every single day. Buyers are really cautious. Rates are high. Home prices haven't come down in most areas. And so affordability is a major sticking point. So not only has the demand cooled, but the demand that is there is cautious demand. People aren't just going to buy any old house. They're taking longer to get into contract. Once they are in contract, there's probably a higher number that are backing out if they don't get, their needs met as far as concessions or different negotiations going on. So that's something to take into mind. Mortgage rates are easing slightly as we enter the end of 2025. We've seen mortgage rates slide from, reaching near 7% different points of 2025 to almost getting down to 6% from a national average standpoint. I know I locked a ton of refinance at 5.99. Some people got into 5.875 or even a 15 or 20 year in the low to mid fives. But as I'm sitting here today, late September 2025, the average 30-year fixed rate is somewhere in the 6.3% range. Affordability is still tight. It's a point worth mentioning again, even with modest rate relief, like telling somebody, yeah, it's a lot better. Your payment's only gonna be $4,200 a month versus $45. It's still tough for a lot of people. A couple more things to mention as far as national trends go. Market segmentation intensifies, high end versus low end, new versus existing, urban versus rural. These different segments are diverging more than ever before. All right, let's jump into some local trends because I want to talk a little bit about my hometown, Sacramento. I'll even share this. Might as well throw it up on the screen for you all because it's cool to see what's going on in Sacramento. You can tell me if your market is behaving differently, either, more of a seller's market or your market might be even more of a buyer's market than Sacramento. But nonetheless, here is some Sacramento specific fall 2025 market data. The median sale price in Sacramento in August of 2025, it's the latest data that is available, was about $485,000, which is down 4% year over year. It's according to Redfin. The average home value in the city is about $475,000, which is down about 3% over last year per Zillow. So median sale price down, average home value down. Again, I'm just telling you how it is. I'm not sugarcoating, and I don't have to spin a certain narrative just because of the, position I'm in as a mortgage broker. Median listing price in Sacramento County is around $549, slightly above the median sold price. Median Median sold in Sacramento County is 522. Median listing home price, of what's being listed is about 485,000. So that number is flat year over year. Homes are staying on the market longer. This is something to think about. And, I'll get into it later in the video on what sellers should be considering, what agents should be discussing with their sellers, and how buyers can be thinking about that and taking advantage. But homes are staying on the market longer, even in a market like Sacramento that's relatively, like compared to other California markets, affordable. Average days on market, up. Call it 30 days versus 20 days the same time last year. It's according to Redfin. Sacramento region is showing signs of slowing with some of the worst June home sales in over 25 years. I'll tell you as a mortgage broker that I know mortgage rates play a part in that. We had what I consider a slower summer than normal, and you can call summer June and July. You can call it whatever months you want. When mortgage rates came down in the recent weeks, I saw a little bit of a pickup in demand. So maybe we're going to see, a little bit busier than average October and November. Who knows? Time will tell. We haven't got there yet, but it feels to me like, mortgage rates and affordability are really a huge driver as far as how much stuff is selling. So we shall see. So locally here, in conclusion, more evidence of softening, lower prices versus last year, longer times to sell, more inventory, and less urgent demand, right? And that's the thing about current buyers. There might be buyer demand, and some buyer demand might come back into the market with lower rates, but it's not urgent demand. A lot of buyers are in a position where I'd like to buy, I'm thinking about buying, but I'm not going to do it right away. As a mortgage broker in my position, I've got literally hundreds of pre-approved buyers that, most aren't in a huge hurry. They're looking, they're going to put in offers. If they get something accepted, great. If they don't, all right, we'll look at some more stuff in 2 or 3 weeks, 2 or 3 weeks after that. So what buyers, sellers, and investors should watch, given all this, what should you be watching? What should you be doing? I think this is important. No, first off, for buyers, there's a lot of buyers out there, like I talked about, that, they're like, hey, the market seems to be moving slow. What should I be doing? Should I be waiting? Are home prices going to go down 5 or 10% in my market? Are rates going to go down? Here's a couple things that you should be considering as a buyer in today's market. Look for opportunities in neighborhoods or property types where demand has softened. Maybe, like the hottest, best neighborhood with the fully remodeled house on the best street next to the best school. Like, you're not going to get a deal for that house, maybe ever, right? But if you're a first-time home buyer and you have some flexibility, look for opportunity where demand has softened. Maybe the fixer-uppers are staying on the market for 45 to 60 days in your market. Maybe the stuff that's, not in a terrible neighborhood, but just less desirable neighborhood is sitting and not selling. Go over there, offer 10% below list price, get yourself a great deal. Secondly, don't ignore all the other costs like insurance, taxes, maintenance. The one to underline here is insurance. And I think the percentage I saw was a 54% in California insurance since 2019. So insurance has gone up a ton. California is not the only area, but that factors into affordability. That factors to how much house you can buy. That factors into the success you have or don't have when buying real estate. You should evaluate different mortgage options. In my notes, I have evaluating, adjustable rate options with caution. Those aren't for everybody, but maybe you look at it and you go, you know what? I've got a stable job. I don't think I'm going to have any problems qualifying 3 or 5, 7 years from today. Maybe I look at a 7-year ARM. Maybe I get a 0.25% better and that saves me a couple $100 a month on my mortgage. Worth looking into. Lastly, if you like it, lock it when it comes to interest rates. I've seen too many people trying to guess what rates are going to do. And, they got caught. The Fed lowered the Fed funds rate. Mortgage rates went up about 1/4 in the preceding days. And people, that didn't lock it were disappointed in what happened with that. All right. For sellers, let's talk about what sellers should be doing in this market. And these are the ones that, in my opinion, need the most advice. Be realistic. I'm going to repeat, be realistic on pricing. We're just not in a market that you may have ever seen. And so I see so many sellers, and I'm just watching real estate as a casual observer. I don't have any vested interest in what the conversations are between listing agent and somebody selling a house. I'm on the buy side. I'm on team buyer as a mortgage broker, getting people pre-approved, being attached to the email that the offer is sent. And so, as an onlooker, I can tell you, you list your house at 650 when stuff in the neighborhood is sold for sub 600. You were just asking to stay on the market for 30 or 60 days, then finally cut down the price, and then wait another 30 days and cut down the price again, and finally only sell for 6 months later at 570. If you listed it at 590, you would sell in the first 2 weeks at 595. Why do that to yourself? Part of it is an unrealistic seller that saw their neighbor once sell for 630. Different market, different time, maybe different amenities for that house. But you just thought to yourself, it's a year later, they sold for 630, I'm going to sell for 650. It's not how it works. So be realistic. Overpricing leads to a longer time on market and leads to a lower price. I've got endless thoughts on how you can mess up as a seller by overpricing. Consider doing updates. Consider how your house shows and how it presents, because buyers are choosy. And the fact of the matter is the ugly ducklings that just get put on the MLS and just get listed and hope that they're going to sell are not selling, right? So you might have to take on that $5,000 to $10,000 cosmetic lipstick that your realtor says it's really going to help your house show better, sell quicker. It might be a little bit of an inconvenience, but you might want to do it. Thirdly, be responsive to buyer requests and concessions. My buddy Ryan Lundquist had a great blog back on September 10th. Go to sacramentoappraisalblog.com. Check that out, talking about sellers thinking it's 2021. They're like, you want $9,000 in credit? Get the heck out of here. You know what happens? The buyer walks. And then guess who replaces that buyer? A bunch of crickets. And then you're on the market for another 60 days and you sell for $20,000 less. If you would have gave that buyer $9,000 in concessions, you would have already been closed. You would have already been moved to your great place in Nashville, Tennessee. But instead, you got stubborn. You dug your heels in the sand and you scared the good buyer away by not being responsive or flexible with some requests there. So that's that, sellers. I mean, just hire yourself a great real estate agent and take their advice. I've got a huge rant that I'm not going to do here because I don't want this video to be 30 minutes long, but I've seen some really, really bad listing agents. Bad. My buyer comes with a great offer. The house has been on the market for 124 days, and this agent's doing everything they can to push this buyer away versus hold on with dear life because it's been 4 months and you finally have a willing and able buyer. I'll save that rant for another video. Trust me, it's a good one. Okay, for investors, this is my wheelhouse. I'm an investor myself. My wife and I own some rental properties. I talk to investors every single day. I love talking to investors from the one rental at a time community. Look for deals where owners are motivated. That's a great piece of advice. And there's a couple ways to know if a seller is motivated. I was talking to a buyer the other day and we looked at this house they were going to offer on where the seller had lowered the price every 7 days for the last 4 weeks. I think they started at $339. They went $329, $319, $309, $299. 4 weeks, they've gone down 40 grand in 4 weeks. That is a motivated seller. That seller's not waiting for 30 days. Oh, let's see what happens. We'll start at $339 and hopefully we get a buyer. They were screaming through their actions, please come buy my house, right? I'm in financial distress. I've moved out of the state. One of those reasons they want to sell. So find those ones and make an aggressive offer. Solve their problem. Their problem is they want to sell. They want to sell fast. Consider rental markets like the rent demand. And, quite honestly, some people are being priced out of buying. So we probably have, a big influx, maybe even a generation full of renters. Think about the average 25 or 30-year-old in your market based on wages. Can they buy? Can they afford to buy? In some places they can't, right? They're going to have to rent. There's going to be a lot of rental demand. If you can go in and supply that rental demand by buying rentals, by buying a duplex, by buying a triplex, could turn into a great rental for you where over time rents are going to increase. You might be able to refinance into a lower interest rate. And, real estate, one of the greatest parts about it is how magical it is over time. Use leverage carefully. This is one that, tried and true advice for investors. I see investors, they get so excited about real estate, they want to leverage it to the, high as they can go. HELOC here, pull it out, throw it on here, and they're, 95% on their primary, they're 85% on a rental. They're pulling money out of, this account on loan to go put it down here, 20% on this house. And, you just got to do it carefully. There's probably some sort of good analogy there where, a chainsaw can be used for good, cutting down trees, but it can also, cut your head off if you're not careful. All right, key inventory or key indicators to watch. Inventory trends, active listing trends in your market. You should be watching that as inventory grows. As a buyer, as an investor, that's good. Months of supply and days on market. Months of supply go up, days on market are 30, 45, 60. That's screaming opportunity. Watch mortgage rates because I'm a firm believer that mortgage rates drive demand. Demand drives price. So if mortgage rates come down, a bunch of demand comes back. It's going to push home prices up or at least create a floor, so where home prices aren't going to, continue to be soft or go down at all in a lot of areas. And then, of course, like policy changes, there's a lot of talk around things that can make housing affordable again. There's an affordability issue. We're in a crisis. I don't know what the answer is. I don't, big government hasn't in the past really been able to solve it, but we'll see if there's policy, zoning, subsidies, permit laws that change real estate, but be on the lookout for it. So in closing, the national housing market as a whole, is fair to say that it's cooling. Sacramento, my local market, is showing signs of softening. It's certainly not, crashing. For all intents and purposes, from my eyes, it's relatively flat, right? The next few quarters will be about how much supply loosens and whether rates come down more meaningfully. If rates come down in any significant fashion, I can promise you demand comes back in the market, has upward pressure on prices. If rates stay between 6.5, I think you can expect a flat real estate market. If they go below 6%, I think you see a 0 to 5% uptick in prices. If for whatever reason rates go up, I think that has downward pressure on prices. So I'll say the same thing, like 6 to 6.5 is flat. 6.5 to 7, the real estate market, price-wise might see a 5% decrease. If it goes down and rates are between 5.5 and 6, we might see a 5% increase. No case where I see any, 10% upswing or 10% downswing. So lastly, do the math on total cost. And I think that people who I speak with do this really well. It's not about like, hey, I'm looking for a house around 550 grand or, any one thing. Take a look at the whole picture. Here's what fits into my budget. If I buy at this price with this down payment at this interest rate, here's what my payment is. That fits in my budget. I've planned for this much down, $72,000, $75,000. I've planned for $3,800 a month in my mortgage payment. I can afford it. I know that, budgeted. I've looked at my numbers. Just don't go into it with all emotion and no practicality and no sense, right? Just do the math. If we can help in any way, we'd be happy to. I'd be honored to help you out in your home buying journey. Go to greatmortgagebroker.com, connect with me and my team. No matter where you're at, we're happy to help, whether it's me or a great team member. Greatmortgagebroker.com. We'll see you soon. Bye-bye.